Courage and perseverance have a magical talisman before which difficulties disappear and obstacles vanish into thin air. John Quincy Adams. My friends, perseverance. Making sure you spend 10 to 15 minutes a day, that is all we ask to master these charts. Our goal is to consistently make good trades and continue to watch that money bank. And of course, as we start off, we're not a stock calling service. We're an education firm. We want you to practice with us. It doesn't cost you anything but 10 to 15 minutes a day until you get good at this. How will you know you're good? Because you graduate from paper trading into, and I'll put this at the end of today's program, fractional trading. What is that? That is taking small amounts of money and doing more than a practice trade, a fractional trade. Many of the brokerage firms online will allow you for something like the S&P 500. Instead of spending $400 and something on a share, you can buy a fractional share. They'll split a share up for you. You can buy perhaps $100 you just put into SPY. Then guess what? You can tell. Did you make your 2%? Did you make your 3%? Did you lose 5%? How good were you at trading? You can do that multiple ways. You can look at the weekly vertical crossovers, 20 of which we provide every week to our Patreon supporters. You can practice trade those. And again, once you get good at the paper trading, there's nothing like jumping into fractional trading where you put just a little bit of money on the line and you see how good you are, how quickly or how long it takes for you to master what we do. Now let's jump into these charts. We see the S&P 500 up, the NASDAQ 100 down, 20-year bonds down again, gold up a fraction, just a tiny little bit, and Bitcoin down. Let's jump into these charts. The S&P 500 up 0.12%. And as we look at this week, are we reaching a higher high than the prior week? 344, 343.44. What was it last week? 342.94. So we have hit a bit of a higher high. Look at that price percent oscillator though. Still negative, derivative oscillator, gaining some upward momentum. So we still have the weekly down today. It is pushing off that line barely. Again, the problem that you have that we see with the price percent oscillator, and this is a great lesson, because for the price percent oscillator to work, you have to have a stock that is trending. If it's slipping sideways and getting sloppy, then of course that oscillation devolves on our moving average convergence divergence indicator. And don't forget, the price percent oscillator is a percentage version of that. There are many reasons that we choose the price percent oscillator over the MACD. And in fact, in today's training for all of our subscribers, and you can subscribe for free at chartingwealth.com. The training is on the price percent oscillator. Please take that training. It's just a few minutes long. It'll be at it's in your show notes. And I really want you to study that, think about it, learn from it, pay attention to it. You'll understand better when the price percent oscillator works and when it doesn't. It's having a difficult time right now on the S&P 500. Derivative oscillator still a little bit negative. And again, that price percent oscillator is a little more than laminated. It's still a little bit above the red signal line. So we see, again, the 2-day chart trying to head up. We look at the half day, and again, same kind of thing here. This is where you see what's causing that lamination, causing the sloppiness on the price percent oscillator, is all that sideways slippage. Look at this narrow range that the stock price movement has been in over many days. What does that do? Well, then that causes the price percent oscillator to be really sloppy. You can see as the market has moved up, price percent oscillator has stayed down on that half-day chart. Why is that? Well, it's because of all these down moves, and again, no clear movement. What's good about that, though, is it keeps you from getting into that messiness so that you don't just get dragged along, not knowing which way things are going. We want to see things trend, and when they do trend, the price percent oscillator works. It gives us good signals across the board on the half day, 2-day, and weekly, and then we look to trade that ETF or stock. If it's not doing that, then we stay the hell out of it, which is what we've been doing with the S&P 500. My friends, you don't have to get hung up on any particular stock or ETF. We pick these 4 because they're good for training. But by all means, what we teach and talk about here every day can be applied to any stock or ETF that is chartable. And that's the big key. Is it chartable? Can you backtrack it and accurately find weekly vertical crossovers at work? That's the number one qualifier. That's where we are on the S&P. Let's go to the Qs. Now, the Qs was down for the day 0.51%. And what do we see going on there? Price percent oscillators flat, derivative oscillator positive, losing momentum. The weekly is continuing to move up. Price is above that weekly trend line. We look at the 2-day. What do we see there? Well, it crossed over going down. And of course, we see for the Monday, Tuesday candle, a red open box spinning top. That's a big slowdown in the up movement. Price percent oscillators negative, derivative oscillators negative, price percent oscillators pulling away from the red signal line. Look at the half day where you had a red spinning top with lots of down movement in the morning and then a bigger candle in the afternoon, but not getting as low as it had in the morning. Price percent oscillator pulling away from the red signal line. Derivative oscillator going negative in the morning and the afternoon. That is where we are on the Qs. And again, we'll continue to watch and see how these things set themselves up. We're slowly but surely coming out of the out of the summertime trading zone into the fall-winter trading zone, when traditionally we start getting better, stronger moves in one direction or another. That sell in May and go away, live to trade another day average, getting in adage, when you start getting into that summertime trading zone, gets a lot of people out because it gets sloppy. It wasn't that way last summer because of COVID. It was a crazy time. This summer, more like that. As we go into the fall-winter trading zone, hopefully things will set up better and we'll have some nicer moves. Hopefully all of this sloppiness will be ending soon. That is where we are on the S&P 500 and the NASDAQ 100. Let's move away from stocks, go into bonds. What do we see with bonds? Well, bonds really started crushing it, going down this week. We can see where the derivative oscillator is still positive but devolving a lot. Price percent oscillator is flat. We have a solid red candle. We haven't seen a solid red candle on bonds since all the way back toward the end of May. And we go to the 2-day, and of course you can see where that 2-day crossed over, took us out of that beautiful 2-day recross that got us in back on, what was that, the 24th of May, and just beautifully kept moving up. Nice 2-day trend line, and then just it started moving over, going down. Actually, we had that 2-day crossover going down back on Friday. And of course, hopefully if you were still in, you cleared that trade before it dropped off the map there on the Monday, Tuesday derivative oscillator really jacking it down and the price percent oscillator heading down. What about the half day? I mean, look at that, just moving down. And again, bonds just losing it. Now remember, money typically moves from bonds into the market when bonds aren't doing so well and vice versa. That is from stocks to bonds. Bonds tend to be a safe haven when the stock market's not doing well. So it is interesting to watch as bonds have just fallen off the map here over the last few days after trending up so nicely. So we'll continue to watch, see where that goes. Let's go back to the weekly chart. Let's check out gold. Gold up a little bit for the day, a little bit, 0.03%. After starting the week off, really hammering down. When gold was almost laminated here over the last many weeks and slowly tracking up. We're hoping gold was going to take off. Well, my friends, it never managed to cross over and then just rolled it. Started on Friday with a 2-day crossover going down and then just kept tracking it. And again, look at it just moving away. Derivative oscillator gaining downward momentum, price percent oscillator moving away from the red signal line. That two-day recross, 2-day recross going down on Friday. We talked about that. I know some of you jumped into it. We talked about the availability of puts. We don't have a good inverse fund for gold. DGZ is an inverse fund, but it is not a good one. The reason it's not a good one on gold is the difference between the bid and the ask is so far apart that you take such a loss jumping into an inverse trade, it doesn't make it worth it. That's where puts, practice trading puts, can really help you if you want to short gold. And of course, so far, so good as far as shorting goes. 2-day, of course, accelerated down. It was up just a touch today, but that didn't, of course, prevent this big red down candle spiking over. What's up on the half day? You can see where we had 2.5 days of strong down movement and then a little bit of a recovery there on Tuesday afternoon. But that price percent oscillator still heading down, derivative oscillator losing just a little bit of downward momentum. That's where we are on our 4 big charts. Lastly, let's go to Bitcoin. How's Bitcoin doing today? Well, it lost a little bit. I think it is down. It's hard for me to see in the light I'm in at 0.83% for the day. 3 weeks of nice up movement. Bitcoin is trying to cross over going up. We'll just have to wait and see what it does at the end of the week. Remember, we never call a crossover until it happens. That derivative oscillator is crossing over, going up, trying to. You don't have a candle until the candle is drawn fully. And we still have what? Wednesday, Thursday, and Friday of this week. So we'll see if Bitcoin's going to cross over going up on that weekly. That would be nice to see Bitcoin take off again and roar like it did when we had that last weekly vertical crossover. What about the 2-day? Well, the 2-day, the latest 2-day candle's a nice one, booming up. Those Bollinger Bands are stretching out, and it's nice to see a big green up candle, price percent oscillator spiking up, derivative oscillator gaining upward momentum. And of course, we can see where over the last 2 days, things spiked and then lost a little bit over the course of this past day. So we'll wait and see. You can see how Bitcoin will pop up, slide sideways, and pop up again. And again, it sort of goes in spurts. So we'll wait and see if it's going to digest that, move down a little bit, and then take off again. Let's see what happens at the end of the week. If we have a weekly vertical crossover going up, if you're interested in Bitcoin, then of course, by all means, practice trade it when you see that weekly vertical crossover. We'll talk more about it as the week progresses. Thanks again for all of the new Patreon members and support. Thank you for the book buyers. Links are in the show notes. If you want to be a Patreon supporter or a book buyer, lots of great benefits for those Patreon supporters. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.